in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by TractorZoom, delivering insights. If you're looking for a great product to go out and track what's going on in the auction market, go out and check out TractorZoom's Iron Comps and use Moving Iron at checkout, and you'll get a little discount there that come along with that. So, Shawn, how you doing this morning, man?
I'm doing great. Looking forward to an exciting and wild 2021. I don't think we're going to have any trouble coming up with content this year.
I'm going to agree with you. I'm going to definitely agree with you. Shawn is a financial advisor with Hackett Financial out of Boca Raton, Florida, and he comes on once a week to talk about all kinds of stuff. And speaking of crazy stuff, they had a few crazy things happen yesterday. Unless you've lived under a rock, you saw what happened at the in the U.S. Capitol yesterday, and so it's a lot of crazy things happen there, and quite frankly, it's a pretty sad day for America as far as I'm concerned. But with that being said, you know, as you take a look at the markets right now, Shawn, you see any big reactions to what happened yesterday? I'm sure the outside markets are going to have a bigger reaction than the actual commodity markets are. But what are your thoughts on that, and what do you see happening because of it?
Well, as sad, I agree with you. As sad as that sort of thing is, from a humanitarian perspective, it doesn't really impact the markets too much. What really impacts the markets are what are the policies of the Biden administration going to be? What is the impact of those policies to the U.S. dollar? And, you know, what are those policies are going to mean for agricultural policy? I think those three factors are really the key to what's going to impact our ag markets. Riots and anger, and we've been seeing these kind of riots all over the country in different manners for a while. Those are sad. Those are disappointing. Those are not great for our country. But what the Biden administration is actually going to put forth with policy is going to really be the key. And of course, weather. You know, we talk a lot about weather on your program, Casey, and of course, weather's going to be really the number one driver here. And we see it becoming far, far more impactful than even the last couple of years have been. So,
Yep. That's the weather situation shaping up to getting a little bit stronger indicators that we're going to heading into more of a drought situation than we saw, a continuation of the drought situation we saw coming out of last summer. So we took about a 2-week hiatus here going over the holidays and just kind of took a break from what was going on, but the corn market sure didn't take a break on going up. So now I think we're looking at I don't have my quotes right in front of me, but yesterday I think December corn closed up around that 440 range, if I remember right. So, I mean, obviously the March contract's almost $5, and if you had a crystal ball that could see what was coming, you would have held till right now and then sold your corn now, but not too many people have done that. So I guess as you take a look at that corn market with all the outside pressures coming on, plus we got the January report coming up next week, that WASDE report, that could shake things up quite a bit based on some of the basis that I've seen kind of floating around here in the Midwest. What's your thought on the corn market right now, and are we headed to $6 corn, I guess is what I'm asking you.
Well, as you know, Casey, our recommendation has been to store as much corn as you possibly could through this entire period of time and only sell the bare minimum to keep your operations funding. Now, whether farmers listen to me or not, I don't know. Mm-hmm. I can only suggest, but holding cash corn has been a winner, since August. And are we heading to $6 corn? I think the prospects are very, very good that we are. When I look out ahead at South American weather, which is really going to be the key driver here in the near term, especially the second crop corn, safrinha crop that gets planted in Mato Grosso starting in January and February, our weather research does not look promising that we're going to be seeing big production, because this is the second crop's their big production. That's the bigger crop.
Right.
That's the crop they export.
Right.
And we see a drought cycle. For Mato Grosso, we see a drought cycle because the planting for corn is going to be delayed because the soybean crop was delayed. It means it pushes further on into their summer and they're a seasonal drier period, it just does not look good, Casey, to me. And so when I look out, we can have a correction at any moment. Everyone knows, hopefully understands that at any moment, for some reason, something can happen. You can get a break, but there's a shortage. I mean, when you have $5 corn in the nearby and you have $4.40 corn in the deferred, I mean, that's a shortage. That's telling you there's too much demand and not enough corn. We haven't seen an inverted market like this. You had to go back 10 years the last time we had an inversion like this. And cash basis is starting to, continue to get stronger. So all these are indications that unless South America has a bin buster corn crop, I think we're on our way to that higher level, come the springtime. And remember, corn acres it's going to be difficult to get corn acres to grow at the level they probably need to, because soybeans are just screaming to plant soybeans. Right. And I guess where we are at, Casey, is, the core acres, the core ground, they have rotations. They do a lot of preparation work, but the fringe acres, that South Dakota, North Dakota, take the fringe acres. We think it's going to go all soybeans because it's cheaper. The price is fantastic. They can grow decent soybeans there and make money. And we think those corn acres that we've been getting a lot of over the last few years from those regions are going to be gone. So it's going to be very hard to get corn acres sufficient. And if we're halfway correct about an escalating drought cycle for this coming spring, summer in the U.S., we think it's a pretty reasonable prospect to suggest that that's a possibility here. In fact, it could even be higher than that. So I guess what we're trying to say, Casey, is if you're a cash buyer of corn, if you're a livestock producer, if you're a dairy producer, if you're an ethanol producer, you just need to make sure you got enough coverage going into the fall, because we could be looking at a substantial escalation of price far beyond what we're even talking about today. You just want to make sure you don't get caught having to buy $7-8 corn like you did 10 years ago. That's just not going to work in a livestock operation for very long. So we really you just have to make sure that you have enough. Prices are up a lot, but they're still not too bad, especially new crop corn at $4.40 isn't that bad compared to where prices could be going if this drought cycle we're talking about plays out.
Yep. Yeah, that's a let's talk about that drought thing for a minute. All right, so we got the drought situation that we see happening. Obviously, it's developed and it is full bore in South America, especially in Argentina more than Brazil. Brazil's still struggling. Take a look at a drought map now, and I think they've switched my neck of the woods from dark maroon to black. I think is where we're at now. So it's the drought situation is getting stronger, especially across the western part of the U.S. Where I live out here in Scottsbluff, our average rainfall is somewhere between 12 and 15 inches a year, I think, if I remember right. So, I mean, you miss one rain, you're in a drought, I think. So it's a situation that we've seen. But that being said, we've had some snow come through here. We've had a few 6-inch snows, those kind of things. But unfortunately, the snow that fell wasn't very rich in moisture. It was pretty dry snow, which sounds like an oxymoron, but it's not. I've actually seen dry snow, and it'll blow your mind.
Well, I was in West Virginia, and we had 1.5 feet of snow, and it was dry snow.
Yep.
I've never seen, because I'm from the Northeast, and we always have that wet snow.
Right.
I mean, I couldn't. You can't pack it together, and it just like evaporates just like that. Mm-hmm. I mean, it's really dry. It's dry snow. It's amazing.
I've used my leaf blower to clear my driveway more than I've used my snow shovel this year. So I just kind of give you an idea of what it's like. But anyway, so you take a look what's going on. The subsoil moisture that we would typically see from the snow coming. It's just not coming. We don't see the snowfall in the mountains, which for the surface irrigation folks, that's a big problem. I mean, they'll shut those canals off before they need to, just because of lack of water. So I guess as you start taking a look at the drought thing, I have my concerns about going into the spring, and that's a long ways away. A lot of things could happen, but you've talked about it extensively on here since January of 20 about what we're going to see coming into this. We've talked extensively about what 21 was going to look like going into the fall, and then moving into the winter of 21, the winter of 22, and what that's going to look like. So it really seems like this is shaping up to be a lot like what you described.
Things are playing out exactly as we've been talking about, Casey. I mean, we are seeing the signpost continue to verify that we're heading down this wild weather volatility path. It's playing that way out. I mean, it is. And so when you look out at that prognosis into the spring of 22, summer of 22, and what's about to happen, not only here, by the way, but also elsewhere, the shortages are going to get worse. The shortages are going to get worse. And so the question will be, how high the prices need to go to ration. So when we think, let's just take the corn market. When we think this through, you got to ration ethanol demand before feed demand. I mean, that's already we're seeing ethanol plants closing down again because the corn price is getting too high for them. So that's the first thing we have to do. Then the next thing is, when do the livestock producers start liquidating their herd because they say, prices are too high and we're just not going to feed these animals anymore. We're not there yet, but that's the next phase, And so the last two times that we've had to ration demand, which was 07, 08, and 10, 11, 12, $8, $7-8 corn was the price that was able to clear the decks and allow for the market to handle itself. But the big difference this time is back then we did not have China in a serious shortage. They are in a serious shortage now, and their buying is very price resistant, meaning their prices are so high compared to U.S. price that their demand may continue to go well into these higher prices and not give us the slack that we had last time. So that's a different factor now that suggests that we might have to go even higher this time around to ration demand enough to get through this patch before weather improves and we get a little breather. You know what I'm saying? So the bottom line with all of this is if you're in the livestock sector, if you're a buyer of grain, you just need to protect yourself. If you look out to December of 22, corn is at 407.
Wow.
That is insane value, Casey.
Yep.
If I'm a livestock producer and I'm looking at cash corn, I'm looking at potential hedging, 407 December 22 corn is insane value right now. Even December 21 corn at 440 ain't too bad. So I guess the point is, even though the nearby price, if you missed that rally, if you didn't catch that, but you still have an opportunity in these deferred feed prices to do something smart. They haven't run away to the upside yet, but they certainly are going to if this weather plays out the way that we're proposing. So I want to emphasize to make sure that livestock producers look at those deferred values and get themselves in the right position to get through this rough patch. There's going to be a great period for livestock after this weather period ends and we get some better times and feed prices come down and the herd liquidation ends. Remember 13 and 14 when livestock prices took off, 23, 24. That's when you get the bubble in livestock prices, and you want to participate as a livestock producer. But to participate, you have to survive this next 12 to 18 months.
Right.
So that's really important to get their hands around that. So,
yeah, there's plenty. That's what I'm paying attention to that as well. I mean, it's just these huge anomalies that we see happening right now that are kind of driving that. You put out you sent a report out back a couple days ago, actually yesterday, 2 days ago, about the podcast you put out about the weather.
Yes.
The weather information that you have there.
That was our global outlook. Global outlook for weather. We went over China. We went over South America. We went over the United States, and went over a pretty detailed analysis of the factors that are at work and what we're anticipating to happen. I'm not, I don't put stuff out just because I'm trying to, instill fear, but I'm just letting everyone know what our work is suggesting. And China is in big trouble. They're not going to have a good weather year. This coming season is going to be a very, very bad planting season for them. Cold, wet, late season frost for them. Kind of like what we're expecting in the spring of 22 for us, by the way.
Right.
And then they're going to go right into a drought. drought cycle this year. No flooding like last year, but a drought cycle. So we see big problems for China. We think the shortages in grains for them is going to get worse, not better. So, when we just look at what's going on with all these important growing areas, we don't see anything happening that's going to provide a buffer here. We just see the global weather thing getting really unfavorable and just escalating the shortage to the point where, we could see a blow-off top. We think a blow-off top could happen in the first half of 22. What do blow-off tops mean? When you get complete abject panic. When you get that vertical move, you get those limit up moves, you get those give up moves where prices go to unimaginable levels, and then the market places a top and then crashes and burns, and you set a high for a few years. I mean, we think we're moving towards that, that moment in the first half of 22, and we're just in this escalation cycle. We call it the phase transition higher, and that's why we're really emphasizing to cash buyers of grain, this is not a time to be hands off. This is a time to be very proactive and very realistic about what's to come. This is not a time to be thinking this is business as usual. It's not going to be business as usual. It has not been business as usual since August. So
yeah, it's some crazy stuff going on for sure, man. So there's plenty of thing happening. So the one thing about going in through the rest of the winter here, we were talking beforehand, and it's freezing cold in Florida right now. It's like 50 degrees, so it's just people are shivering to death. It's crazy, but nonetheless,
our tulip flowers are cringing right now. So.
I'm sure they're just beside themselves. But they've got. You're talking about some cold weather patterns that were going to come through my neck of the woods, which I'm super excited about. But the bad thing about it's not the problem with the cold weather is not the cold weather part. It's what it does to stuff when there's not a layer of insulation, i.e. snow, that comes along with that. So you're talking about some polar vortexes coming through, some of that thing. I guess as you take a look at those situations and as they start to develop and grow, what's your thought pattern here the next getting through this the rest of these winter months here?
Well, a month ago we put out a forecast that we were expecting to see a big shift in the weather at the beginning of the year. That this warm pattern was going to start to shift, that we were going to see a stratospheric warming event. That is when the stratosphere warms suddenly, and that destabilizes the polar vortex, which usually keeps the cold air wrapped up in the Arctic region. We said that our work suggested that would start to happen. It is happening. We are actually absolutely seeing a stratospheric warming event. What we showed in our podcast 2 days ago was a computer model of what happens when it gets disturbed. It gets wobbly and it opens up, and this cold air is allowed to spill out from the vortex. China right now is experiencing this. They're actually 15 to 20% of their winter wheat crop is experiencing some form of winter kill right now as we speak. But what happens is that this vortex spins, and the wobble continues, and now it's the part of the vortex that's open to the cold air coming in is going to start to shift from China over to the United States mid-late month. And so we think that there is a significant opportunity potentially for that to spill in to the winter wheat belt, KC winter wheat belt specifically, here mid-late month. And because it's been such a dry winter, and it's going to continue to be a dry winter, as you said, there's a very low snow cover and a lot of acres this year where normally that snow would protect. So we think that there's a potential for some winter kill events here in the U.S., and we think this could continue, Casey. Like, this thing's going to continue to offer these opportunities in Asia, Russia, and the U.S. for probably a month between, let's say, mid-late January to mid-late February before it might calm down. And so the winter wheat market is really, could get clipped by this. Remember, we have a very, very dry winter wheat area in the U.S., a very, very dry winter wheat area in Russia, and they're in very poor condition. Just to give you an idea, 15 to 20% of the acres that were planted in Russia is not merged, is not going to emerge because it was so dry, it didn't come out. So when you have very poor stands and you have very poor quality or very poor condition wheat, and you don't have snow cover, and you get winter kill, the impact is amplified from normal. So, we just think, once again, everything that can go wrong is going wrong. And that's just seems to be what the cycle we're in right now. So we would really pay attention to this for special winter wheat. We think there could be, we think it'd be a market mover here. We could think it'd be a market mover here.
Yep. And kind of explain some more of the stuff that we're talking about here. Shawn and I did an interview with Dr. Valentina Zarkova, one of the leading astrophysicists that's studying grand solar minimums and what she sees happening there. And she was kind enough to come on and do an interview with us, and it's going to be a two-parter. So Shawn and I will get those out here. I'm going to start cutting them up here, and we'll have it out hopefully part 1 out this week, and next week we'll have next week we'll have part 1 out, and the following week we'll have part 2 out. So and then we'll have a part 3 as well, where we kind of talk about some CO2 things and some myths and misnomers that are being tossed around out there. So, Shawn, great stuff as usual. Folks want to reach out to you, get more information about what it is you're doing. Maybe find that podcast out there. What's the best way to get a hold of you and find out what you've got going on there at Hackett Financial?
The website is Hackett, Hackett, advisors.com. Like I said, we have a lot of interviews and sample reports and such. If they wanted to see that global weather outlook that we put out 2 days ago, we always are glad to offer them to your listeners. So if they want to see that, they could just shoot us an email at Shawn, SHAWN, at Hackett, Hackett, advisors.com, and we'll be glad to send out, get that podcast out to them. It's a pretty detailed overlook of what weather is likely to take place in the next year globally, and should offer a good template for those that are in the ag business right now. So
right on. Well, I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast when they come out. Also, any blog posts I have as well. Also, check out movingironllc.com. That's going to give you all the information for the podcast, as well as the blogs that get posted. Also, all the information on the Moving Iron Summit that's coming up September 15th through the 17th. We had to move those January dates just because of COVID, but here in the fall, hopefully things will be better. Check that out for all our latest information. I will have all the latest room links and those kind of things all posted, so you can start booking your rooms now. Shawn will be there, and actually it's going to be a pretty timely event for him. We're going to be talking about that September time frame leading into that fall of 21, which we've talked so much about, and a lot of things could be taking place at that time, so I'm looking forward to that, Shawn.
Me too. It'll be extremely timely, and we'll be right in the thick of this serious weather volatility period, and it couldn't be a better time for really providing pertinent and actionable information on this weather phenomenon that's really going to impact the winter of 21-22. So it's looking forward to it.
Yep, me too. So another thing as well, if you are in the equipment business or own a piece of equipment, make sure you use ironcomps.com. Their information they have there, go subscribe to that service. I use it a lot. You're going to get a lot of great information about what's going on, and there's a lot of things happening in the equipment marketplace right now. A lot of trend lines that are starting to develop where there could be some pretty heavy implications for some things by spring, just because of what we see happen with commodity prices and the volatility in trading equipment and upgrading. So highly recommend anyone that's interested in what's going on in the equipment market space to check out ironcomps.com. Use Moving Iron at checkout and you get a discount. So with that, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.